winner. Joining me now, Evercore ISI head of internet research, Mark Mahaney. Well, there you are, Mark. I tried to make this case yesterday to the Wedbush analyst, Michael Pachter. He disagreed, but can you weigh in here on the power of YouTube versus all else?
Yeah, and I'll just focus on Google and YouTube because I think sometimes it's missed. This is what we know. YouTube is generating about 40 billion in ad revenue this year, plus an additional 10 to 15 billion in subscription revenue. So that's 50, almost 60 billion in revenue just coming from YouTube. And if you look at the Nielsen data, the one company that's gained the most share in terms of streaming hours over the last, call it year or two, has been YouTube, and they're the largest player. They have simply the largest share of streaming viewing hours. So somehow we've sort of forgotten about YouTube and Google's positioning here. And by the way, I think this is one of the reasons why you've had this dramatic levitation in Google shares year to date. It's just one of the reasons, but what a powerful portfolio of brands they have, including YouTube. That asset, again, 50 to 60 billion in revenue, growing mid to high teens year over year, and probably nicely profitable. They don't disclose, but I think that's probably generating a lot of cash flow with all sorts of content, Liz. I mean, they're giving you kind of YouTube shorts, the kind of user-generated content, social media type content, as well as tons of sports. You can get your NFL Sunday ticket there, and then in addition to that, you've got a lot of kind of professionally created content. So they really give you the whole shooting match.
Yeah, and you've got Gemini and the really popular rollout of Gemini 3, not to mention, you mentioned the micro dramas. We've talked a lot about that and watched that growth on YouTube. And then it was almost like the timing was unbelievable yesterday. Hits the wires that the Oscars are leaving ABC in a couple of years and going to be exclusively broadcast on YouTube. That should tell you a lot. Let me just ask you, though, about your other outperformance. So you love Google. What about Amazon? Amazon was earlier the lead on the Dow Jones Industrials. Why do you love this one?
Well, let me rephrase it a little bit. I like Google. I loved Google, and we had it as our top pick at 150, 160. It's not a top pick now. I want to be fully respectful of the ramp it's had as a stock.
Why not?
Amazon's kind of the next dislocated somewhat stock, and it's been a dog this year. It's underperformed the market. I think it can really turn around next year if they do another quarter of accelerating AWS or cloud revenue growth. And I think what you're going to see is there's going to be a pop in at least a little bit of a bump up in retail sales activity in the US next year. I think Amazon will fully benefit from that. I like the fact that they're rolling out a new satellite broadband service called Project Leo. You're going to see that as a competitor to Starlink next year. I just think a lot of the pieces of Amazon are humming well. The stock's kind of lagged, and I'm looking for a kind of a reversion of that, kind of like what we saw with Google. So that's why Amazon's actually our number one pick, Liz.
Number one pick, Amazon. Hey, it's great to see you. Mark, always a pleasure to have you on the show. Have a great holiday season.
Happy holidays. Merry Christmas, Liz.